Hope you're doing all right. Today, I'm gonna walk you through exactly how I trade. Real quick though, if you wanna make money without doing any of the hard work, I have a Discord. I literally let you guys know exactly when I enter trades. And I'm just kind of giving you guys money. So if you want this to be in your account, go join that. The link's in the description. And I'm really just trying to help you guys out and help you guys make some money completely free. Go join. Anyway, took one trade today. Yesterday, I don't know if you know, $1.5 trillion was sold off the stock market with FOMC. That's this huge red candle right here. Yesterday, I made a short talking about price action today, and I literally called it bar for bar. I said, yo, we're retracing into this order block. We're either gonna bounce off or we're gonna sweep liquidity and find equilibrium on this fair value gap. Absolutely insane. Very nice trade, 1.95 OR, $650 trade. Anyways, today I am giving you guys free money and telling you guys exactly how I trade. So starting off, I've talked about this before, this indicator I use, Smart Money Concepts by Lux Algo. Anyway, looking at this trade, I trade off of 3 key concepts, all right? Liquidity sweep, order block, and fair value gap. Those are my big 3, right? Starting off with liquidity sweeps. Liquidity is just resting orders in the market, and big hedge funds and institutions look to take out this liquidity to be able to push price in the direction that they want to go. So if we have something like this, liquidity rests above this high, and same thing on the flip side, resting above this low. So what these institutions are going to look to do is push price above, stopping out all these orders because people might be in trades like this, right? So after they get stopped out, this creates orders that these institutions can fill to push price back in the original direction that they want it to go. Same thing works on the opposite end. Some traders might be in trades that look like this with their stop loss below this low and their take profit somewhere above. But these institutions come in, push price below, stop people out before pushing price back up the way that they want it to go. Secondly, we're looking at order blocks. These are these rectangles that you see. This is a bearish one, and down here I have a bullish one drawn out. These are zones where I personally look for after liquidity sweeps for price to retrace into to then take my trades. I don't take trades strictly off liquidity sweeps. I wait for retests into them, into the order blocks, I should say. So up here, obviously in hindsight, I'll be the greatest trader in the world. But if we're looking here, we have a high, pretty easy to spot. Again, no need to overcomplicate things. And we come up here, remember what I said, we have this high. We break this high, sweeping liquidity, and price pushes back down in the original direction that we want it to go. However, as you can see, with that, our indicator here has drawn out a bearish order block, right? So we can mark that out. And using this, I mean, you can see bang, 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 3 perfect trades to take off of this order block that you didn't even do any of the work. It was the computer drew it for you. Price exits this zone after sweeping liquidity up here. We come back in, bang, that's a short. Come back with this bearish hammer. I've talked about candlesticks a little bit. Beautiful entry, bang, we're in shorts again. We retest, bang, we're in shorts again. Obviously, like I said, back testing, you're the greatest trader in the world. But you have to get used to seeing these things in hindsight so that you can see them as they happen. It's all about practice and getting better with these concepts. Lastly, fair value gaps, drawn out with a rectangle with a 50-50 line drawn down the middle. These happen when price is imbalanced, right? So we have these huge moves. You're looking for candles with little to no wicks, huge bodies. Obviously down here, if you follow the stock market at all, you know, this was a news-induced candle with FOMC. Absolutely insane. Still a fair value gap, and I'll get to how I played off of this zone in a second when I'm talking about today's trade. But I mean, you can see these things, they happen a lot, right? Fair value gaps are a 3-candle pattern. You want these 2 surrounding candles to show price holding. Ideally, all 3 of these candles are the same color. So for the sake of this explanation, these are all bullish candles, right? So we have one out here, price is holding, moving up, nothing insane. Here, price is still holding, nothing insane. But this middle candle is where the actual imbalance occurs. We have very little wicks and a huge body. That's what we look for. These candles are marked from the wicks of the opposing candles. So for bullish, it's going to be the high of the first candle to the low of the next candle. And you're going to draw this out from those wicks, right? Very simple concept. You're looking for these huge moves, and we look to play off them. So same thing if we're going bearish. You can kind of picture what it's going to look like. Same thing, but just on the flip side, have these candles in this downward move. So this is what a bearish fair value gap is going to look like. So now that we understand the big three and what they do, we're gonna see how I played off of these today to make $650. But anyway, after this move, we created a low, and with that low, we created this fair value gap. So just to show you guys, this fair value gap, again, bearish, drawn from the wick of this top candle, the bottom wick of the top candle, to the top wick of the bottom candle, all right? So after we draw that out, as well as the slow down here, we see price tries to buy back a little bit. Price ends up coming back down, breaking this low. We sweep liquidity, and I hop on a trade as we come back into this previous bullish order block, holding that trade until we hit this 50% line of this fair value gap. So the reason we target this 50% mark is that as we're pushing down, people are looking to play shorts all throughout this move down, right? So people are trying to catch this momentum, catch this move, and they're hopping in shorts as we come down with this huge candle, right? So if there are a lot of short and a lot of sell orders in this fair value gap, the average of those is obviously going to be at this 50% mark, right? So that's where we target, because as you can see, once we hit this halfway equilibrium point, price then starts to push back down. But yeah, those are the big three that you need to know when you trade. Pretty simple concepts at its core. Understanding why they work can be a little bit more confusing or a little bit more in depth. One last time, the Discord. I learned all the trades. You can ask me questions. I have a trading journal posted in here. I have some advanced strategies, some beginner tips. All my trade recaps are posted. Go support my boy Kez. He's a great Forex trader. I don't really mess with Forex, but I mean, that's a great catch by him. 180 bucks. But yeah, just trying to get a community going out here. If you're looking to start your own trading journey, very beneficial. You're able to ask questions, be surrounded by like-minded people. And if you're just looking to make money, also very beneficial. Like I said, I learned all my trades, and I'm just giving you guys cash at this point. Come on. But anyway, that's it. Hope that was a little bit helpful and you learned something. I'll catch you later.